The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting for Larry Pesavento today, and it's my pleasure to be here. The second hour, usually I do the Monday, Wednesday, Friday, 11 o'clock till noon show, Eastern Time. But today I have the pleasure of also doing Larry's show noon till 1 o'clock. And it's an interesting session, and I'll explain why. If we were in a bear phase at this particular point, the market would be taking every opportunity to be selling the rallies and making low lows and lower highs. So while we still are making higher highs and higher lows in this particular phase right now, the prices are underneath the previous major high. But what's fascinating, if you're looking at the ESU12, that's the E-mini S&P September futures, and in this particular instance, I'm looking at, of course, the title of Larry's program is called Trade What You See. But let's do this. If we were looking at the patterns of repetitive patterns, what you will see is that from the low of 1255 back at the doji candle, I love to look at doji candles, of the 4th of June at 125, at 1255.50 in the E-minis, this is September E-minis, there were four subsequent higher highs to another doji, and that doji was at the high on the 5th of July at 1375. That's 125 points higher. Now, what's really key in this whole thing is that in the Chapman wave methodology, what I look for are four successively higher peaks from a most obvious low bar, and then at that fourth highest peak, you can pull back. You can pull back and retest. You can go higher. Other things can happen. But at that fourth highest peak, that's where a judgment is made both on technicals, on chart patterns, but on price performance, having had the strength to make four higher peaks. That's normally where I start to get somewhat cautious. I have a song, and the song goes, the wave, which is the Chapman wave, goes to A, then to B, then to C, and then to D. That's when it flashes a cautionary light, but all you got to do is make your stops real tight. And in this particular instance, what we're looking at is the E-mini went to that 1375 level on the 5th of July. Then it pulled back, and if you're looking at the Tiger TV, you'll see the charts right here. And then it pulled back, and it went to 1319.75 on the 12th. Then it started to rally up, and I call that, it's what I call the gray A, because it's underneath the previous high. So even though it's a peak, I give it a different color just to show that it's still retracing back to the old high. It makes a new high at 1376, 1 point higher. I must type that in so you can see 1376.00, and then fails and retests that previous low that I was talking about on the 12th of July, the 1319.75 level. Where does it go to? 1321.25. So it's higher, and that says, okay, look at the technicals to see that's the MACD, the moving average convergence divergence, and the slow stochastic. Then it starts a brand new move. So that's a pattern that I call either a V or a cup-shaped double top. Then it pulls back sharply, and it starts a brand new move that goes to 1387. On the 30th of July, goes to a higher high of 1403.25 on the 7th of August. Then it goes to another high at 30, and when I say a higher, I mean a higher peak. And then it goes to a higher peak at 1409.50 on the 14th of August, pulls back, and then it goes to 1424.75 on the 21st. Since then, it has not been able to break that pattern. But wait a minute. I do chart patterns. I have dozens of chart patterns that I use, that I either have created or techniques that I've created. And this one here tells me that I can draw a descending line like that. I'll explain what it is for those of you who are listening and not looking at Tiger TV. Look at your at Moby 1. Just go there, TFNN, Moby 1. You'll be able to pick it up right away. That's a pattern I call the falling axe. Why? Because it looks like an axe. If I draw the blade, the handle comes up like that, pink in this case. It comes down with two lines, lower highs and much lower lows, and then it forms a pattern that says if it breaks above the declining top trend line, there's a really good chance, and closes above it, there's just a really good chance it's going to retest the top, which would be at 1424.75. There could be a measured move in my technique that I've developed, and that technique takes you just slightly higher, maybe to 1427, 67, somewhere around there. So this is a very critical point. Why? Because if you're looking at the E-mini, the weekly chart made a high of 13.50 back in week of the 30th of March of this year. Pull back to the 1255 level, 1255.50 level. That was the week of the 8th of June. And now it's run up. Now, here's the other thing, another use of my candles. Or let me put it this way, another use of a candle that I've identified in a specific way. I call this the wide-legged or long-legged doji. What it implies is that if there's a break of either side of the long wick, in other words, 1424.75, if you go above it, or if you go below 1395.25, the bottom of the wick, it says that within 2 sessions you're going to know a lot of information. Why? Because if it closes decisively above, and then the second bar, I'm talking weeklies now, the second bar is decisively higher, and by that I mean significantly higher. In other words, it isn't just above 1424.75, it's somewhere, it closes somewhere around 1431, somewhere around there. That's the second bar, not the first bar, but the second bar. It says you have broken to the upside, and that is very positive. And as long as the technique of the MACD and the stochastic, using those two instruments, tools, technical tools, and I have a Sears and Roebuck box full of technical tools. I want to use as many as I can. I am then looking at the chance that this is going to be leg B. And if it occurs not next week, but the first week of September, now I'm going to talk about September a little later on. If it goes the first week of September, I anticipate then that bonds will pull back even further. The volatility index will remain in the teens, and the dollar will not rally, but the euro will. So now let's see how that all pans out. Because in the euro weekly, this is the EUSU, I'm looking at the E-mini. Right now, the candle, the body of the candle last week, where it opened at 1415 and it closed at 1409.75, that red body that you can see at this particular point, let me open up a little wider. That red body says, be careful, because it is a magnet line. If in the second week there is a move up and then it comes back down, be careful, because the range I just gave you, that's like a magnet. It's going to come back there. If it goes underneath, if it closes underneath 1339.25, then 1389 is the 9-period exponential moving average. That has to act as major support, just as it's done every week since it broke out the week of the 15th of June. And it's walking the 9-period exponential moving average. There is nothing wrong in the chart I'm looking at right now, but this is the beginning of a week. It's the beginning of a very important week. I have to look at this bar Friday at 4 o'clock to be able to give you a true assessment. I'm only anticipating an entire week's worth of movement, but those are the parameters I'd be looking for. At this point, the weekly chart is very strong, and so is the monthly, funnily enough. And because of that, I want to do something else. I know Larry uses the S&P quite a bit. He uses the NYAG, the New York Stock Exchange. So I'm going to do this. There's a chart that I show periodically, and I've been showing it a little bit more lately because of the type of analysis I'm trying to give here at TFNN in my work, just to show what I look at. And that is the monthly chart of the S&P. But before I do that, I'm going to give you the number. It's 877 927-6648. I do want to take calls. I love to take calls. I'm going to look at corn and other things. I'm going to look at the commodities. This is the futures hour. Well, it's not the futures hour the way Larry does it on Thursday, but Larry always looks at the futures of the different, anything that's important in his show. So I'm going to do that as I move along. So now let's do this. The monthly chart of the S&P is in an unquestionable buy mode. It has made a new recovery high above 1422.38. I didn't want to type it in because the month is not finished, but it's already gone to, oh, wait a minute. Yeah, 1426.68. So that's as it stands right now. That can change because if all of a sudden there is just, we're in a period right now of the summer. We've been talking about the summer doldrums, but it's also the news doldrums. People are not that interested in the news, and people are getting very tired. Talking about tired, I'm going to also look at the RTH, the retail index. I want to explain something. I was going through this with someone over the weekend. I was just asking the question, actually. I didn't really give an answer. I just said, my question here is, and this is someone who knows about economy and, just very involved in looking at all the different aspects of the market, etc. I said, how come in this particular period, and I'm looking at this chart of the S&P right now, this is the question that applies not just to the RTH, it applies right now to the S&P. If this is the worst economy since the Great Depression, and our politicians always use that, they've just, every time, I've been here for a lot of elections, and I've heard it every single time. If in fact things are so bad, how come the S&P index, which made a low of 666.79, and look at these beautiful up and down channels, how can it be in such a strong up channel and close within 120 points? Look how quickly we made the last 120 points. Within 120? Let's call it 150 points of the all-time high in the S&P. Isn't there something wrong with the picture? Well, I've spoken about this for a chunk of time, and what I've said is, I believe that we had a crisis in the housing market, which was fed by politicians, fed by us. We can't just blame the politicians. It was fed by regular folk who thought they would make a killing by buying a house and flipping it. It was done with mortgage money. It was done by the banks. It was done by we were all involved. There were a number of us here at TFN just saying the housing market in 2005 was making a top, and what I said is it's making a top of tremendous significance, perhaps decades, but it could be very selective there as well. But the most important aspect was that there were sectors of the real estate market which were highly vulnerable. Now, I want to talk about that in the chart as soon as we get back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Hi folks, this is Larry Pesavento show. Basil Chapman in, sitting for Larry Pesavento and Trade What You See. And we're looking right now at the S&P monthly chart. And all I've done is I've put in channels. And they're very simple channels from 1994. They go all the way up, and the price never broke up above it. Went all the way to the March high of 2000 at 1552 from 435 low. And then what happened is it came down to the 768 in another beautiful channel. And what I've done is I've drawn in red and green. These are the red is always support. Or in this case, if it's rallying, it becomes a repellent line on the upside. And if you break above it, the green line at the top, that's very positive. If you break under the green line at the bottom, you've got to be careful because you're starting to get into the buy zone, and you've got to see where would be the support. And it goes back from the October 2002 low to 768.67. It goes all the way to 1576.09, October of 2007. I love the way that you look at March to March, October to October. Now we've got March. We'll see where it's going to stop on the upside. But it's very interesting that this particular chart right now still remains in a buy mode. Now, I just want to point out two things. One is, in the other moves to the upside, you had at least two buy modes that took you to at least a peak D and E before it turned down sharply. This time we've only gone to D, we made an E, now we've got the new high, even though it's just fractionally higher, is a new high. Doesn't have to close there in this particular case. It just means moving to a new high. and breaking above the previous high. And that says this is either leg F. If it's a peak F, the sixth highest peak, you saw what happened to this peak F right here in July of 1998. You went from 11,090 almost straight down to 923. So I'm watching this very closely. There is some similarity to that, but not yet enough. So what I'm saying is that at this, right now, as we're talking, this is still very positive. If in September at any point you break under to this month's low of 1354, that's negative, but the moment you break under it, not only is it negative, you've got to think there could be that H pattern that says be careful, because the entire bar of June going down to 1266 to the uptrend, it coincides exactly with the uptrend support line, that becomes a target area. Bonds will go higher. Now, I'd spoken about bonds being 10, 11, I don't know how many years ago, the Japanization of our bond yields. That implied to me that at some point the United States is going to have a very difficult time economically, and that the Fed will feel that it's forced to keep rates as low as possible, just as happened in Japan. Now, sometimes the result is the same, but getting there is completely different. I have no idea if that's really going to happen. What I'm saying is we have, in a sense, had this Japanization of our bond yields, not necessarily the economy per se, because we've done things very different. Remember, Japan didn't loan money. We've given away money. So there are great differences. Will the result be the same? Hey, I don't know. All I'm saying is that I wanted to talk about that. I wanted to show the chart. Then I want you to go to the RTH and then take calls at 877-927-6648. The retail, this is the Market Vectors Retail ETF. And I've got this chart. I printed it up a while ago. It says, what recession? Remember, this is discretionary income. The retail, these particular retail stocks. Yes, Home Depot's part of it, but it's also, I believe Home Depot's part of it, but that's been a slightly different thing. Now, the context that I was talking about talking about Home Depot, the context I've been talking about in terms of discretionary income, that's number one. In terms of housing, let me put that. Now, I've had a long time. I've been, the whole of the summer, I've been ruminating and thinking about how can I put this together as a puzzle, a jigsaw puzzle, or a chessboard. Now that I've got the pieces together, I think I'm starting to see a much better outline. And that says that the incredible smash to the downside in the, I remember going to Florida a year, 2 years ago, 3 years ago, and seeing the for sale signs, and there was nothing. There's no activity whatsoever. Well, they're lovely places, beautiful places. At some point, people want those places. It could be foreigners, it could be national, international, doesn't matter. Well, those places do come back. That's got nothing to say about the overall housing market, but the surprise to me was that in the Northeast, and I also believe in the Northwest, the housing market has been incredibly stable. I don't ever remember recessions where housing prices didn't drop way more than the 10, 12%, 14% in some of the areas of Boston. Yeah, you had foreclosures, but in the main, houses held really well. That is unusual. I've never seen that. I went back historically to find it. I can't find that analogy anywhere. So we'll talk about that. We'll talk about the RTH, and then we'll talk about various stocks and commodities. Be right back. Basil Chapman sitting in for Larry Pesavento, 877-927-6648.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. We'll even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Thank you for Larry Pesavento. This is Trade What You See, and my pleasure to be here. The Dow is up, Dow's on S&P's up 268, and this is what I've been looking at. I've been talking about the retail index. Now, the kind of, not the conclusions, but the assessment that I've got is that people just got rid, people who had jobs, and those jobs appeared to be steady because they went through some very difficult years, but they're still in the job, just got tired of saving and not putting money to work. And as a result, I think that's why we've got the Market Vectors Retail Index moving higher, because I think that discretionary income in lower amounts, not the houses or even automobiles, was what people were buying. They felt they could go out and they could get themselves something nice, but they've been good, so they can go and get something nice, but they didn't want to spend too much. There's been a market change, I think, over the last 6 months. This is my assessment. I have no economic real data to it. It's just my visualization of charts and things that I read, etc. Now what I think we're seeing is that the bigger items, like the automobiles, like houses, are looking to be bargains. That's one of the reasons why you've got in certain parts of the housing market, you actually have bidding wars. Here in the Northeast, we've got places where there are bidding wars. So that is very different. That says to me that we cannot rule out something that's a little different. And this is not the time to do it. Maybe I'll do it in one of my shows coming up this week. I want to talk about the spending of institutions as they are crying for money on very big projects, huge buildings, big concert halls, etc. At the same time as there's a competition, as there was competition to build better gymnasiums, etc., for students to look at. You know, here at BU, we've got this fantastic Agassi, I'm not sure what the name is, center. Just when you go into the gym, you say, this could be, people would pay a fortune in the real world to be able to come here. And that's for students. And there's a competition for that. So there's a competition now to give as much tuition to students as possible, to grants or whatever they can to entice students to come, because it's become so expensive. So I'll talk about that another time, but I wanted to put it together and just say my assessment is that people were saving, they were paying down their credit cards. The spending here is on smaller luxury items, or smaller items. It doesn't have to be luxury. That's why you've got discretionary money going into the market vectors retail. I've got it very close to some kind of topping level here. We're going to watch it real closely. In fact, we do have a position right now on the short side within 7 cents of being stopped out for like a 1 point loss or something like that. It was so close because it was up in the sell zone, but it's managed to push higher. I'm prepared to come back into this again a little later on at any point if I'm looking to see a peak D or the repellent zone come into play right now. Leg E up in the weekly. Now, okay, enough with that. Let's go to corn. You know how I like to switch? I like to go from one thing to the other. So we go to corn. Corn, C-O-R-N, the Tukrium corn fund. Who was talking to me about that just recently? Anyway, this corn fund is at 51.10, down 11 cents. I think it's making a peak D in the weekly chart, but the technicals are really strong. But the daily chart is making that pattern that I call a flat base restart, and that's the look of it. And all it says is it could pull back. And if it was to pull back, the major support is at 51.10. The major support is at 47.10 if it continues to pull back. But most importantly, if it breaks out and it closes above 52.71, I would not want to be short this at all. In any case, I would not be looking at this as a short. I'm looking at this as a potential buy for the portfolio, going to some kind of commodity activity if certain conditions are met for my opening call subscribers. Oh, that's my service, opening call. Very comprehensive look at the markets every day, 6-7 charts every single day. I show from the 120-minute chart to the daily, to the weekly, to the monthly, all these different aspects. The question I had from a new subscriber is, why? The first chart you list is the ESU12. That's the September E minis. I showed the 10-minute and the 120-minute chart with the Chapman wave assessment of it. I showed it a little earlier in the show. I haven't got that chart up right now. And can you tell me what purpose this holds? Is it an indicator of the direction of the S&P over the short term, 1 month? If the ESU12 is going up, then the S&P should go, etc. No, it is a 120-minute chart. I actually don't give buys or sells in it. I treat it purely as a Chapman wave lesson in the technique of looking for peak Ds, etc., and looking at patterns that repeat over and over and over again. Remember, this is trade what you see, so I try to do that as best as I can using the ETF because it trades through the night. It tells you what happened overnight. It gives you a largest perspective of parameters because it's continuously trading. So that's what I use it for. There's a period where I might start to do some work where I do give buys and sells in it. I do so much. I don't want to you can overload in this business very easily. I like to do what I do best. That's what I'm going to try to stick to. So now let's look at the CZ12. That's the December corn contract. Well, that made a peak E-top, and now I can put my down arrow because that's what I was waiting for. Down arrow as the technicals cross negative, and that says it's in a trading band. And the trading band says it might have a tough time on the shorter term, at 807.5. This is the corn contract, December contract. The 830, the 840 round number high of the 21st, it will be your first, that 836 to 840 will be really strong resistance in the near term. That's this week. But looking out, 849, the round number high of the 10th, that is going to be key. If that is taken out, not only does it make legs C up in the weekly chart, because at this point, having gone vertically in the monthly, you'd expect a huge pullback. So what I'm looking at is what would break to the upside. If it breaks above that 840 level, it's probably going to test the 840. 849, and if it goes to 849 and 1/8, that is leg C up in the weekly, and that says good chance you're going to still go to leg D over the coming months, many weeks, let's put it that way, rather than months. But the major support right now, I'm going to move this up a little bit. This is the major support, that whole area right there. If you're looking at my charts, daily on the left, weekly in the middle, monthly on the right. Now I'm expanding it out. That area there says that 771. These are big parameters. 771 is the key support. If it takes out 786, the low of the 13th of August, expect the candle of the 24th of July down to 745 and a half. That's the candle that you want to look for. If the price goes right into 778, halfway into that wick, there's a good chance the bottom of the wick will be tested. So that's that. I want you to talk about oil. The USO, I'm using that. I'll go to, in a moment, I'll go to the contract itself. Now, this went to an unusual, I'm calling it an unusual leg G and then a peak G. So this goes F and G. And it does that under certain circumstances. And those circumstances were all met here, as there was this kind of a double, I call it a double hump. It's really two arches that were made in the slow stochastic. Now what's happened is, you see this line that I've highlighted with the little dots on it, if you're looking at Tiger TV, that's the 200 period exponential moving average. Now, I know Larry doesn't use the exponential moving average, doesn't use any moving averages. He's done just great without it. I use it. It's just another tool in my toolbox. And what I wanted to show is that 200 period exponential moving average. Let me squash the chart. You don't have to be looking at price now. I just want you to see price movement. You see that this chart, it went to two peak Ds. The last peak D was way up in March the 1st, this is the daily, at 42.30, and we're looking at the United States Oil Fund LP. It's an ETF. Is it an ETN or an ETF? Well, it's one of those. And what it made was a high at 42.30 on the 1st of March. It came down from the peak D, and it went to a trough F, 6 lower troughs, and then it touched the 200 period moving average, which was before, right at that doji, before the start of that move up on the 1st of March, 1st February, at 37.35. That was the line that was key. So it touches it, but this time it has a really pathetic rally. It goes to peak C minus, only 3 peaks. The stochastic went up over 80%, but not even for 3 bars, not even for 3 days. And then it pulls back sharply with the MACD, and it plummets down, and that white line, once it gapped, and look how it gapped right through the 200 period exponential moving average. That's the 200 period moving average. That's that movie purple line right there. Breaks under it. That line has not even been closely broached until this month, August, when on the 7th of August it went to 35.25. That was a peak D, pulls back, holds the 9-period moving average, and then works its way to this E, F, and G. And at 38.45, it's pulling back, and today it's under that 200-period moving average. My visual eye, rather than just the technical, say that the magnet of this line is still so strong that the USO should still keep bouncing around above and below, but most importantly, if it's able to close above 36.12, it's at 35.33, in any of the next 2 sessions, there's a real good chance I might have to relabel. If it breaks above 36.45, call that new leg D to the upside, and 36.81 is the 200 period right there. Simple moving average. That's how I use these things. Now, in fact, I also see a butterfly, but I'm not going to do anything with that right now. What I am going to say is that that's the daily. The weekly stopped right at the simple moving average, 200 period moving average resistance. That's this one here, right there. Before it's made peak ABC minus. So I've got to be careful that it's not following this pattern of only making 3 peaks and then pulling back. But look, the stochastic's at 81%. That is very positive. So I'm going to go to our first caller. We've got Warren in Denver. Hi, Warren. How are you?
Good, Basil. Great. I was listening to you there. Fantastic oil analysis.
Oh, thank you very much.
My stock is WLK. It's sort of a commodity stock. It's dependent on natural gas being low, staying up.
Oh, I don't know if I've ever Westlake Chemical Corps.
Yeah, it's like on the Gulf Coast, and of course now they're having a little hurricane, so it's a little pulling back. But my question is, I didn't know where to start the count at the bottom on the daily. If that was
if you don't mind, let me just quickly. It takes me no more than a few seconds. So the 28, 22, 28, 28. So that's A, B, C, and this is new leg D in the monthly. So that's very good to know. So this is A, B, very sharp pullback at C, and now it's making D, nominal new high. That's the monthly. Folks, we're looking at Westlake Chemical. Let me type that in, Westlake Chemical Core. And it's trading at 68.45. WLK is the symbol. It's down $1.05. Now what I'm going to do is quickly grab the weekly. Folks, the way we look at it, go to the lowest, most identifiable low bar, start your wave count, see how quickly I can do it. How long does it take me? CDE, done. I've just done the weekly, and that didn't take very long, but it takes me a little while to find my arrows. There's the up arrow, there's the down arrow. That's not an E, that's an F. Got to know your alphabet. I did a lot of alphabet work over the last week with my little grandson and my granddaughter. Now the question is this going to be, I just want to double check. So in the weekly, 66.92, 66.74, good. Now is this A, 22? Oh, this is so interesting. Look at that. Folks, I don't know how many times we've got this A, peak B, peak C, peak D. We've got it again in the weekly right now. We're just making a peak D if there's no new high this week in the weekly chart. And you asked me about the daily, so that's the next one.
Oh, that's fine. That weekly, that's really helpful to see that.
But you see what's happening. There's a pattern that I talk about very often, which is not my favorite pattern. It's called the cup and handle pattern. My favorite is the Chapman Wave cup and ladle, which it did try for by breaking out. Let me just draw right across here. Usually I do a left side, right side price time match. I'm not going to have time for that. Now what's happened is it's made a cup and a handle. The cup and ladle is when it doesn't stop at the left side high from previous, when it made the cup formation down. It goes right through it, and then it goes to at least a leg D. This went to peak F right at the just under the high of 67.77. It went to 66.92. Now it's pulled back, and it's made a new recovery high, but it's in leg D. But you see the MACD and the I bet you noticed that the MACD and stochastic are very strong in the weekly still. Yeah. Now, do you don't have a position, but
no.
You're looking
it's just breaking out here, and it could just keep going on up as natural gas keeps going down for the fall.
So they're natural. The chemical. Why are they called chemical if they're natural gas?
They process ethane into plastic resins of all kinds.
I got it. Oh, I see. Okay, so they use it. Okay, very good. 48.13. Give me 1 second here. I want to type in the daily A, B, C, D, and it goes to an E. And now I'm going to, for argument's sake, I'm going to call this peak F. Oh, this is a great chart, and I can see the analysis coming up right now. Folks, we've got a break. We've got Warren in Denver. We're looking at WLK, Westlake Chemical Core. I've just finished my notation of it, and I'll do the analysis as soon as we get back. Good eye. We'll be right back with Warren from Denver.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everybody. Basil Chapman sitting for Larry Pesavento. Don't forget, straight after the show, you got Daryl. Daryl? Why did it suddenly blank out about his last name? Daryl. Oh, Daryl, what's your last name? Anyway, Daryl Martin, of course. Daryl Martin, thank you, my engineer. Quickly came to my rescue there. Of course, it's Daryl Martin. Diagnostic Trading Hour. Great show. Absolutely great show. Fabulous show. So stay tuned because he's going to be here from 1 to 2 Eastern Time. And sorry, Daryl, I just it's right there in front of me. I can't believe I suddenly forgot it. Okay. WLK is 68.48, down $1.02. It is Westlake Chemical Corporation. And we've got Warren in Denver who asked about it. Now, Warren, this is the way I would look at it. The MACD and stochastic are turning down, and I have to call this, at this point, I'm with a question mark, a peak F top in the daily. But the technicals really are holding extremely well in the daily, and the weekly looks like it's just setting up for a longer term bias towards the upside. So here's my recommendation. And I know that you really don't mind starting small positions to get a feel for a stock. So I'm going to suggest, even though the 120 minutes says that if it made a peak E top, and it says that if it pulls back from here and closes the day at instead of 68.43, it actually closes down at about 68.20. There's a good chance it could test the low of 66.53. And that low was on 66.53 was on this morning, actually. So gap down is trying to rally. I happen to like this, and I would set up two positions. So the one position is right now, as we speak, I just saw a small position. Then I would add another position if it takes out the low of today of 66.53, because the next level is at 65.49, the low of the 13th. But then I've got a rectangle formation, and that says that if it does actually go down towards that level and it starts to hold, it could have a nice move all the way back to the 69 level where the 9-period exponential moving average is, and if it makes it there, it could retest the previous high of 70.15. If, on the other hand, it doesn't, the gap down was some news-related thing, and it doesn't gap down much further, it says that if it takes out today's highs without testing today's low in the next 2 days, it could go to a higher high. If it goes to a higher high, I have to have a new account, and that will be leg C to the upside if it goes above 70.15. If it does that, the weekly gets even stronger, and the monthly, which is great price action, but the stochastic's only at 71, then it finally has a chance to get to 75% over the coming week or two, and eventually to 80% in the monthly, and that's what I expect. I like the action. I would say that if you take a small position here, it needs to have a wider stop, and I know that you wouldn't mind having a 2.5 or even 3-point stop on a small position, right?
Yeah, I was thinking about 66.06 on 803, and maybe the top of that little gap from 64, like 802, 803 area.
I think you know your numbers. I think I would agree with that, and there's only one reason that I would do it. Normally I would say, could be double topping here. The technicals are actually strengthening in the weekly. It's going to take a lot for it to get from 92% to under 80% of the stochastic. I think this is a sign of strength right now, and I'm with you. Good eye, and I think that you have the potential. Now, the upside, I actually can't give you an upside for this reason. This is an all-time high.
Right.
But if you remember looking at the gold chart from way back in 2000, it made this incredible cup formation, and then it broke out. So this big cup formation could break out. I like it. I think you got a good eye there.
Okay.
Good luck with it. Thanks for calling.
Thank you very much, Basil.
Thank you, folks. Basil Chapman sitting in for Larry Pesavento. Stay tuned for Daryl Martin coming up with the Diagnostic Trading Hour. I'll be back on Wednesday for my usual show at 11 o'clock.